This stream is powered by Bybit. Bybit is probably going to become the most dominant exchange moving forward, I think. So the link below, tradebybit.com, that is going to give you access to upwards of a $31,000 bonus, I believe, again, depending on how much you deposit. Bybit is the only exchange that has seen growth over the last year. And you can imagine what exchange has seen the least amount of growth. So check out that link below if you're interested in trading on Bybit and if you can trade on Bybit, right? The flow and profile course. I created a course covering the fundamentals of market profile and order flow. So using things like TPO charts, market profile charts, footprint charts, covering cumulative volume delta, what is delta, yada, yada, yada. You know, how I establish where I want to trade and then things that I look at to determine if I want to trade. You should find all of the videos that made up the course. This is a really basic course. As a reminder, none of what I say is financial advice. This is strictly for entertainment purposes only. Another thing I want to go over, because I am on the team, I am not just sharing a ref link by any means. I am on the core team. This is Synquote. So this is a decentralized options exchange. I share this a lot. It's very easy to deposit to this. This is the #1 decentralized options exchange by volume so far. So they've been just absolutely wiping the floor with the other dexes that are available. And this is a request for quote, meaning it's not an automated market maker. And one thing I want to mention to bring this up is that they've now changed the UI. It's a little bit more like what you would see if you're coming from using traditional options exchange. And another thing that they're going to be integrating, hopefully within the next week or so, I don't want to say it specifically, but if you're not using a market order, what are you using? So yes. Big picture view. Listen, I haven't been focusing on this market. I missed a very obvious trade yesterday into last night. So I'm just going to make it clear this is absolutely hindsight. But if we look at the TPO chart, so that gray box right there is a single print gap. So it's going back all the way here to the 29th and then actually the 31st, where we had a liquidation structure up and then a liquidation structure down. So that's left behind a pretty big vacuum, a pretty big pocket. The thing about it is it offers us maybe not a complete bias as to what direction to trade, but a location to trade. So we've been ranging underneath it and establishing value in a pretty clean area. You can see all of this value overlap going back to the 1st of September. And if you don't know what I'm talking about, this is the time when you take the free course. So this is a pretty clean range from a value and a structure standpoint, minus, the wick at the low. Break outside of that range, and then we reapproach this gap. So it's a liquidation candle down. You could imagine that a lot of those liquidations came with stops being blown out, and where there are stops, there are people that are probably similarly positioned but don't have stops. Reapproaching any kind of gap like that. So if you have a one-sided candle down, you know these candles, right? It's a big ass candle that engulfs a ton of prior structure. It could happen on the way up or on the way down. If it happens on the way down, obviously we assume that there's a bunch of longs liquidated. You could see that in open interest, one of the biggest cleanups in open interest we've ever had. Where that occurs, there's going to be people that are stopped out that are not liquidated. And then again, the assumption is that if there are people that are stopped out, there's also a lot of people that don't even have stops, right? They're just loosely handing positions around here, building a larger position. And maybe they're averaged slightly higher at like 26.4. And this move suddenly changes their bias because, all right, we did away with a bunch of structure. That move should have held up, right? On bullish news, bullish catalyst. Now we've wiped that. We have a massive liquidation. All right, let me get out of this position if I can and reevaluate, right? I always talk about I want to split and reevaluate, right? I want to get out of my position, reevaluate, see more, evidence that this is worth getting back into a long. So as you reapproach the area where gaps occur, you just have to think of that dynamic taking place on a larger scale, right? So you got a bunch of traders that are, they're underwater, price is reapproaching their break-even level. The threshold of the gap is usually the area where you're going to expect that supply to come in. If it's a long liquidation structure. The opposite would happen is if we had a short squeeze, price moved up, reapproached the gap that was created to the upside, and then you have shorts that are like, all right, fuck this, maybe this thing's going to squeeze up even more. So we reapproach that from the underside, so that gap threshold right at the edge. So you want to look at where the single prints meet structure. So this is singles, and then you start to have a buildup of value. That's where price begins to range a little. So right at the threshold, so this is where I'll box out single prints. Right at the threshold, that's where you want to look for a fight to take place, right? Whether or not bulls are going to be able to fight their way through, whether or not bears are going to, overpower bulls, not to anthropomorphize it too much, but this is where you're looking for either acceptance or absorption. And then it's, there's some times when you just get really obvious signs of absorption. And there's sometimes a lot of times when it's not clear. And when it's not clear, that's when you're going to have trouble where you're going to, all right, is this absorption or is CVD leading? Or, maybe you have a sign of absorption in CVD, but you're not at like a really significant trade location. So why would we have absorption here? It's kind of in the middle of nowhere. But so that was the trade location. So price trades up into that gap. You have even highs. So you have equal highs and then you have a lower high. And then as price transitions lower, so from left to right, you see high, 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 relatively equal highs, and then slightly lower high, no real wick, more congestion. Where that happens, it's very clear if you look at CVD that instead CVD was up, right? Price flat, slightly rolling down, CVD up. So optimal area to look to begin to see, hey, who's in control here? And then very clear by this alone that with all this aggressive buying, you couldn't move price up more. So passive sellers are in control. Really obvious trade. Unfortunately, wasn't paying attention. And this is one of the problems of not having enough alerts and also just being kind of apathetic lately. As far as the big picture goes, I think we're kind of, like I said, I think we're in the same position we were last time from a time standpoint. I just wonder if around the halving this time, we'll also have an accommodative environment. So I do think the macro is very important. I think that if you don't have an accommodative macro environment, if liquidity is not at least flat, remaining the same or increasing, I think BTC is going to have a tough time replicating prior cycles to a T. So without a catalyst right now, so unless there's some kind of ETF announcement in the near future, I don't see us doing much into 2024. I see us offering plenty of trades within a range. I do think we look at lower prices. I think the lows are in, but I think that lower prices are not necessary. Lower prices meaning 22, 21, 20 region. I don't think that those are out of the question at all. I think it's very, very odd when people say that things are out of the question after watching this market for more than a year. You could watch this market for just 6 months and begin to realize that really nothing is out of the question. I know there's been like hidden stealth QE with the banking crisis, but either way. So I think we're going into the halving from a time standpoint and prior cycle highs, lows. I think we're kind of on pace. The halving is really reliable because of the behavioral component, not because like the amount of supply that comes into the market after that and miners. I don't think that that's necessarily it. Obviously, if the market had the same amount of demand and less supply coming in, you could kind of extrapolate from that prices would have positive drift over time. But then there's still people that can just sell a fuck ton of Bitcoin, right? It makes no difference. So it all depends on demand, right? But I do think that this is the most reliable catalyst to look forward to. It's going to be really bad if we don't see signs of strength around the time of the halving. I think that this is kind of like, Bitcoin has, in terms of being digital gold and a bearer asset, that's great. But in terms of the cycles just repeating perfectly over time, I think that people like to kind of mock other people that say this time is different, but it's a new market, right? And this is all very new in terms of what's taken place over the last 2 years macro-wise. So I just would be careful getting rocked into complacency. What you really want to do is just have a tool set going into that time. You ideally should have something that's grounded and systematic to some degree where you could say, okay, yeah, bias clearly is being established. For me, I really like to look at the 20 period moving average as kind of a line in the sand. You can see that this is on the weekly. We've lost it now. It's going to just go sideways. I mean, year to date, so one thing that you should think of, bullish, bearish, whatever. Year to date, BTC's performance has been, you could say it's spectacular, because if you look at the S&P, if you look at the NASDAQ, and then you look at BTC and ETH, they're in that order in terms of beta and returns. So BTC year to date's up 55%. I mean, that's fucking awesome, right? Without a catalyst into the end of the year, I just expect that we continue to chop. I think there'll be good trading opportunities, but this market is just kind of drying out right now. Alts, I think alts are going to just continue to bleed. There's a ton of supply. There's no real world application. Pumps, I think, clearly should still be sold. There's obviously some games taking place. If you go on like Coin Screener at any given point throughout the day, just change this funding rate. Find the funding rate that is egregiously negative. So you'll see on Bybit, a lot of these alts are trading, and listen, some great short opportunities, some great long opportunities, depending on what point. But there's a lot of fuckery that's taking place. A lot of manipulation between the spot market and the derivative markets in many cases. But I think it's, the tendency is for just people to flock to anything that's new. Most of the shit right now is just going to kind of like continue to drift lower. I mean, if you look at just everything outside of BTC and ETH, the market is fucking terrible looking, right? There's really no reason to get excited. There's people getting excited about on-chain, but listen, I gave my opinion on that. But if we actually just look at, for example, total 3, so we even take away something, USDT, take away USDC, take away stables even. You could take away XRP, you could take away BNB, you could take away some majors. There's nothing going on. Nothing going on aside from just a few pumps here and there. Let's say we have the ETF announcement and the market, it pumps less than 5%. I think that is worth selling as well, honestly. Unless we have a catalyst into the end of the year where the market rips up 10% and we see that there's just an insane change in flow, I think that into the end of the year, all pumps will be worth selling. I think that we're looking at, honestly, let's say we don't even come up here. Let's say we get 27. Let's say we get 28 again. I think we end up coming down to test below 25. I think it's kind of all but inevitable that we end up trading back in this region. I will say, for anyone who's like hyper bullish or wants the good news, I think that now that we've sort of solidified this higher time frame market structure and we have a situation where we're very clear high and we're looking at this on the monthly, you see the same on you could look at the quarterly. I think that high time frame change now is something that you just absolutely don't fade. So after all of this juking and jiving down here, if we're continuing to like range and just trade within the structure and we do test out these lower prices, wherever the fuck that happens, if you're back up here and you have a high time frame close through there, I think that begins the next leg up. If you get a high time frame close through here, that's probably where you want to be really patient with long positioning, because chances are that over time, whether it's over a month or 2 months even, or maybe it happens in a week, who knows? There's just very high probability that if you're trading back above this level after this type of rejection, we're back within this larger carve out, that we're going to take some time, but we'll end up tagging some of these more important levels within the structure. So that is like the most obvious level on the chart to me to get really bullish and to also be really patient. All right, so low time frame wise, we are still trading within a range more or less, right? So we found trouble in that gap. We have a multi-day composite, so we're trading back in that multi-day composite. So if you just combine all these days, which I think is reasonable because you have more than 50% overlap for a majority of them, right there, you have the area of acceptance where more or less price is where it is, where it's accepted. So anything within here is really accommodative. There's really not much you could say directionally in the center of this, as much as you can at the extremes. Again, do I think that this is going to roll right away and give us another really big move in the near future after this kind of open interest wipe? Not really, unless there's a bunch of spot selling that comes in. So we saw that this big move was off of a very significant wipe in positioning. So if we end up trading back towards the low of this structure, I would probably look for that third time a charm trap, right? So you had a bunch of activity trapped down here. So if you look at this entire profile, this is the volume profile and delta for the entire composite. This is where using a volume profile and looking at a TPO profile together are useful, because you actually have cases where you'll have tails like this, and you might have a tail that looks like that in the profile. And sometimes you have a profile that's a volume profile like this, and it doesn't really show you much took place down here. The volume profile matches the TPO, so they're kind of complementing each other. But the best situation is when you have a tail like this. So you have excess at a low, and then meanwhile on the VP, you got a bunch of activity trapped at the low. I don't know if there's a whole lot that's worth even focusing on in this market. As I've said with Solana, I think Solana is going to be more or less what ETH was. I think Cycle is going to follow similarly. So from a time standpoint, I think we're kind of in this region with Solana as far as where it is in its cycle in terms of maturity. I don't think Solana is dying. I think Solana is going to be, if we see ETH and BTC continue to push into next cycle, I think Solana is going to be a clear winner. We just need markets, global markets, to not fuck it up, right? And if the best case scenario would be them, ripping, or us seeing, strong performance across the board in risk assets. So I think, again, market is, it's in a really shitty place. It makes sense, honestly, look at other markets. Like people, if you're finding a lot of success trading crypto, you probably have the kind of brain that could figure out something somewhere else as well. It's the best way I could put it. Unless it's some kind of, super idiosyncratic, anomalistic edge, that only is available in crypto and it's only particular to maybe an exchange or a pair or what have you. If it's an edge based on you having proper discretion and not fucking yourself by having bad risk management and again, having repeatable approach to the market, you probably can do that in other markets. Other markets have been honestly great to trade. Does anyone have any questions during the stream? So I've been trading the NQ. And if we just look at the NQ right now, we came out of a 4-day bounce, broke down. And what happened was we traded through a gap. So as I mentioned with BTC, here is a gap on the left-hand side of the screen. So you have single prints, an area of value separated by no activity, no value, and then area of value. So you have a double distribution. So on the way back to that level, that was the area where you saw a response, right? So right at where that pocket began, we just accepted and continued to fill it out. So that's where the actual singles were. This is where the low volume node begins. So you can see we got a response at the singles again, and it just offers a first area to look and first area to start paying attention to see if there's a lot of times just scalps that are always going to be available at those levels. But if you don't see a response, more often than not, you're just going to fill the entire thing out. So you can see that's what we've done with the NQ. Buying the ETF, I don't see a reason to buy the ETF. I could own the spot market. If you have a chance at owning the spot market of something, it doesn't really make sense to buy the ETF unless you're going to add it to a traditional portfolio, right? That's fine. There's a lot of people that are helped out by ETF listing because right now there's only ETPs and CME futures, which you have to roll up the curve since it's trading in contango and you pay that roll yield. So it's great for a lot of people, but for someone who's already in this market, it doesn't make sense to buy the ETF. How do you read the chart with stacked horizontal blocks? So this is good. Use the course. That course that I just talked about earlier in the stream, that is where you will learn all about that. So this is just a TPO chart. So real quick rundown is a time price opportunity chart. So each one of these columns, so 1 column, 2 column, they're labeled A's, B, C to show you the different columns. But each one of these columns is a 30-minute window of prices. So where price was over that 30-minute window. So just think about 30-minute candles with no open and close, but instead just high, low. And then what we do is we just compress all of that. So by doing that, we're able to see what price levels price traded through the most throughout the day. So where price spent the most amount of time. You're getting an idea of context. So when you have profiles like this, a bit more balanced than looking at a profile like this, which is 2 periods of balance followed by an imbalanced portion. Then you have a balanced profiles, relatively balanced, but not very clean. And then going all the way to something like you see on the far left, which is very imbalanced, right? A trending type of day. It's not even a trend day. It's a short liquidation kind of day. Balanced profile look like this, sort of like a Gaussian distribution. And then a imbalanced trend day where price is doing this will look like this. So brief periods of balance separated by imbalanced regions. Just take the course. It's free and it'll explain everything. What we're looking at here is, this is Jigsaw. This is the best DOM software next to, I think, Trading Technologies. I was using Sierra for a bit, but I just couldn't get my finger on why I wasn't enjoying it. It's just, there's a slight lag in Sierra's DOM. And it was enough for it to mess with my head because you'll see that the price might have moved on the chart slightly more than the DOM. And there's just some kind of sync issue. That's not something that you want to deal with. I want something that is updated immediately. And Jigsaw is just, again, I don't work for Jigsaw, not shilling. It's free shill. It's an expensive platform. So, I mean, it costs, I think, upwards of $1,200 or I can't remember actually. So I have a tape. So this is a filtered tape, reconstructed tape. So I have block trades. I have regular trades that are going through. And then I also have trades that are above the ask or below the bid. So at any given time, I could do a really good job just by looking at the tape of telling which side of the market is really aggressive, how fast the market is moving, how interested the market is in certain levels, or whether we're looking at breakouts or breakdowns. The tape should confirm that, right? These blocks that you see, ideally, if we get a breakout or breakdown, for a breakout, you would want to see that this tape is just flashing blue to see that people are getting really aggressive. There's really none of those popping up right now. It's a slightly different blue that I have. Jigsaw actually has a tape meter, which is pretty cool. So you could change the milliseconds for how this updates. So the tape on the left is a minute. It's going to show you which side was more aggressive over that minute. And then this one is 15 milliseconds. So it'll adjust a lot faster. So why is this important? Well, if you're trading higher frequency, if you're trading and you're scalping, if you're just kind of like trading around core positions, one of the things you might be paying attention to is the frequency of book updates, how fast new bids are coming in, how fast new offers are coming in, and whether or not there are people that are actually interested in doing business. Yeah, it's honestly, can we just say how it's actually so difficult to trade during a stream? And I'm not saying to actually do it, but if you have stuff you want to talk about, you can't trade. I have a bullet point list of things I wanted to cover during the stream. It's just impossible. The last thing I'll go over is icebergs, because you won't see an iceberg if you're going to look for icebergs in crypto now that they're more prevalent. Determining an iceberg is pretty simple, honestly. One, you could use a volume profile. Let's say that we are looking at, in terms of, let's say 72. So 44.72. Let's say there's an iceberg there. There's a couple ways you could look at it. If we're approaching it from the low, well, let's go to a higher price so we don't tag it. In the situation of an iceberg and it's in the offer, okay, that offer is going to be hidden. In the iceberg, you might see 2,000, 1,000, 3,000, 4,000 contracts transacted. Sometimes you'll see that. You could guarantee that that's not transacting. So anyway, let's say it's 82. A couple ways you could look at that. You don't have to use a DOM. You could use a volume profile that has a really low tick increment. So the most granular volume profile you could look at. Why? Let's say that we were looking at 82, we're approaching 82, and there's 100 in the offer, there's 50 in the offer. But as we're approaching 82, we got a volume profile developing, right, for all of this price action. And it's really granular. So it'll be something like, it'll be sharper kind of volume profile. Or you're looking at this volume profile in the DOM. As we trade up to 82, you might see that the offer remains static. There's not a whole lot going on. More importantly, it's refreshing a lot, but there's not 1,000 contracts in the offer. But we're trading into that level and you'll see the volume profile actually really pick up. So you might see a volume profile that literally looks like that. Skinny, and then you just have something that's massive like that, a big spike. And that's because all that volume is taking place. It's not being shown in the offer, but it's being transacted. And then you could look at a footprint chart. You'll see it cleanly in a footprint chart. You'll see, let's say, a 300 tick rotation in the ES. And then you'll see, on average, the delta is going to be anywhere from 1,000 to 200. You might have a case where the footprint has literally like 2,000 at the bid. Okay, that's an iceberg. All right. So let's say it was right here. We trade back. You're going to see the same thing happen. It's going to be like 1,000 at the bid and it's going to stay put. Now, I've gone over how I trade icebergs, but the point is this is one way to determine they're there. Looking at the DOM, it's the easiest because you're going to see this volume profile build bigger than it probably had at any other point during the day. And if you're refreshing, again, the point of refreshing is you'll see that begin to build up much more rapidly at one particular price point. So you can see this, it's not going to be advertised, but you're going to see all that volume transact either way. And what happens is there's only the tip of the iceberg that's exposed, right? It's constantly being refreshed. The Q priority is there. So there's orders being inserted and no one's able to jump that. And you'll get some decent short-term trading opportunities around it. I've listed that in the Discord completely. I've talked about it in other streams, but anyhow. All right, guys, I think I'm going to wrap it up. Subscribe to the new YouTube channel. Check out those links below for Bybit, for Synquote. Keep in mind, Phemex is listing a token, I think in the next couple of weeks. There's a Phemex link below with a bonus. What was I going to say? Oh, the course, part of the YouTube now. So be sure to take the course.